Today we are looking at margin trading on Binance, and probably more importantly just trading with leverage in general, and how to do it without too much of a risk, so you're not going to sort of overexpose yourself and lose all of your money, which is pretty highly likely whenever you're going to trade using leverage. So let's check out Binance's news today. Here we can see that Binance has hiked leverage to 125x for launch of its Bitcoin Tether Futures exchange. And yeah, so it used to be 20x, and now they've put it all the way up to 125x. Now, you may well already know that Binance made over $1 billion over the last year. They're one of the biggest exchanges, if not the biggest exchange in the crypto sphere. But with this new 125x that they're offering, they could well see those profits skyrocket to maybe like $10 billion next year. Who knows what's going to happen? So anyway, let's check out what it means for you and how you can actually profit from leveraging. With just a standard limit order on Binance, if you wanted to buy up, say, $100 worth, or maybe even $1,000 worth of Bitcoin, you can do it right here on the exchange, but you're limited to whatever funds you actually have available. With leveraging, you can essentially borrow some money from the exchange so that you can have a bigger position. Say if Bitcoin were to rise by 5%, rather than just making 5% of $1,000, you'd be making, say, 5% of $10,000 or 5% of $100,000 worth of Bitcoin. So there's a lot of potential to make a lot of money a lot quicker. Unfortunately, the truth is the odds are in the favor of the exchange. So if you are using leverage, only ever do it when you're pretty much on a sure thing and you're not going to take too much risk that you actually risk losing everything. So now we're going to have a look at just what those figures are and how much you could risk losing at different amounts of leverage. Check it out. Okay, so first up we've got what is leverage, and this has just been pulled straight from the internet, and it says leverage involves borrowing a certain amount of money needed to invest in something. It's pretty much what I just said, right? In the case of crypto, money is borrowed from the exchange, and the crypto trading does offer high... What does this say? Crypto trading does offer high leverage in the sense that for the initial margin requirement, a trader can control a huge amount of value, which is pretty much what I just said. So I'm sure by now you understand, you get what leverage is if you didn't know so already. So let's just check out what this actually means. So here we've got the stake. So we're suggesting a $100 stake is what you're putting down. And this is the leverage, so just 1x, basically no leverage at all. You're just getting 1-to-1 ratio. You're getting $100 worth of Bitcoin. So just as in what we were looking at, if you're on Binance, you're buying $100 worth of Bitcoin, you get $100 worth of Bitcoin. And if you want to take that $100 worth of Bitcoin off the exchange, you can do that. However, if you're leveraging, so you're putting in 100 but you're getting $10,000 worth of Bitcoin, you can't actually take that money off the exchange. It's just stuck on the exchange because your stake is actually still just 100. You haven't actually really borrowed the money. You don't have it. So with 2 times leverage, $100 would actually be a $200 value position that you're holding. And 5x would be 500, 50x would be 5,000. This is all from the same $100. And then with 100x on $100 would be $10,000 stake that you've actually got in there in the position on Binance, which is a lot. It's substantially more than $100. All out loss over here that you can see is how much the market would need to lose in value for you to lose 100% of your investment, i.e. to be all out. It's an all out loss. Basically, what would be known normally as a margin call on a normal trading platform. So if you had $100 and you just bought $100 worth of Bitcoin, straight value, then Bitcoin would need to go to 0 it would need 100% loss on Bitcoin, on the value of Bitcoin, for you to lose all of your money. Which with Bitcoin is pretty much not going to happen, which is why I switched from trading Forex and other things over to crypto. And if you've seen some of my stuff before, how I got into crypto with the Bitcoin multiplier method back in 2017, turning like $500 into like 11,000 plus, that was all done with no leverage whatsoever. That's just buying crypto for what it is, because it's so volatile on its own. You don't really need the leverage. However, if you were and you were going to buy a $100 stake in with 2 times leverage, then the price needs to just go down by half. You do realize that. So if you're buying Bitcoin at $8,000 and Bitcoin falls to $4,000, even though it's only two times leverage, you're done. You're out the market and Binance takes your money. And if it was 5 times leverage, then it only needs to go down by 20%. So quite obviously, if you bought in at 10, which it was at 10 just a few weeks ago, and then it's gone down to 8, you're out the market. You've lost all of your money. Whereas if you bought in at 10 and you just bought Bitcoin at normal price, normal value, no leverage, you've still got money. And then if it's times 50, it's just 2%. 2%. And at 100x, it's 1%. And as we just saw, Binance has now increased the amount of leverage to 125 on their futures trading platform. So the actual figures on that is 0.8% of a loss. So Bitcoin, you'd normally see on CoinMarketCap, and it's up and down all the time, you know, like 5-8% in a day, no problem at all. But with 125x, it only needs to go down by 0.8%, and Binance get to legally keep all of your money. You are gone out the market. And right now we'll just have a look at what that looks like on Binance. So this is the usual limit where you would buy. You just hit market, so now you're just buying at pure market price. Then you've got the stop limits up here. We've got margin trading. As we can see, I do not have a margin account, and with what I've just said, maybe now you can see why. And now they've also got the futures X20, so this is brand new over here, and you can see it here at the top. It says 20x, and it is now customizable leverage. So if you click that, you can just up your leverage now all the way up to 125%. But remember, bear in mind, a loss of just 0.8% in the price of Bitcoin, and you have lost 100% of your investment. It is all down the drain. And on this hourly chart of Bitcoin, let's just take a look at what that 0.8%, or in fact, let's just make the math simple, shall we? And we'll just look at 100 times leverage. So that's going to be a 1% loss for you to lose all your money, which at say $8,000 would be $80 loss. So if we just have a look, you can see this is a 1 hourly chart. So we've just took a bit of a loss here recently. So this is 870, and in 1 hour it was all the way down 8, 7, 8, 9. Yeah, it is. That's well over 80. So that one you'd have been all the way out, all the way out. In fact, this little one here, this is 7963 down to 78. Yeah, so that would have been about 80 as well. That would have took you out the market. So you can see here how easy it is to just lose all of your money at like 100x, you know, 125x. It would be insane. Just looking here on CoinMarketCap, you can see cryptocurrencies generally, they're up, you know, 2-3%, you know, 5% in a day, no problem whatsoever. In fact, if we just have a quick click on that, you can see this coin here is actually up 47% in a single day. And there's a lot of them there, you know, up over 5%, no problem at all. And the same in the downwards as well. You've got down 8%, 7%, 5%, no problem at all. Cryptocurrency is horrendously volatile, and because of that, you do not need leverage. So leverage was really made for the traditional markets, things like Forex, the indices, stocks, things that don't really move all that much in terms of price. And because of that, for the exchanges to entice more investors to invest more often and do more sort of day trading type activity. They allow for leverage so that people can sort of trade in the day, trade in those really small price movements, and actually still be able to come out profitable, or at least have the opportunity to possibly come profitable. But when you're trading something really volatile like cryptocurrency, there's just no need for it. It's just an excuse for the exchange to take everybody's money. So if we have a look now at some Forex, this here is the US dollar against the Mexican peso, I believe it is. So, and this is from 2016 all the way up to the present day. And over those last few years, the Mexican peso has been up to $21 at one point, and then all the way back down to $17.50, averaging around the sort of $19 mark. So in that 2-year period, sort of up in 2 years, that's 3 years, right? It's been up and down a couple of dollars each way of $19.50, say. So it's or $19, up and down just a couple of dollars each way. However, when we take a look at Bitcoin, you're going to see a very different story. So looking at Bitcoin, same time period, 2016 to today, you can see this is based on Binance, and Binance wasn't around back then. But you can see that price of Bitcoin here was $3,000, and then in a very short space of time it was $20,000. So that's not just a couple of dollars, that's a gain of like $17,000. And then it lost $17,000 all the way back down to $3,000 again, then up to $14,000, and now back down to where we are now at $8,000. So you can see the crazy roller coaster world of cryptocurrency. And if you're going to tell me that you need to put some leverage on there to make some money, I don't know what you're doing wrong in trading. You really do not need leverage at all. However, if you do use it in such a volatile market, then the chances are you're going to lose your money pretty quick. So great news for Binance. I do really like Binance, and I'm glad to see them making really good profits. I just hope they're not taking money from your wallet. And that's about it for today, and hope to see you again soon next week sometime in another video. Until then,